Hi and welcome back to my channel. I'm working my hardest to get caught back up, but I am behind on a few videos. It's been crazy lately, but there's been a ton of support. Thank you so much. We've got a lot to talk about, of course, with Vivint Solar and what's going on there, but we'll talk about how my portfolio has performed on the week first. So as we can see, my portfolio value is 6633.56, or up 144 on the day. Of course, huge gains there. On the week, up 276, or about 4.5%. On the month, up $28 or 0.4%. Over the past 3 months, up 21%. Over the past year, up 5.27%. And all-time now up 7.86%. As we can see, I'm up $483.55 all-time now. And when we extrapolate that out, my portfolio investment is now $6,150. That's awesome to see, and I'm super excited. We'll get through this quick so we can talk about Vivint Solar. I did purchase $150 worth of stocks last week, of course. I purchased 2 shares of SPHD at $31.77 a piece, total cost there being $63.54. I purchased 1 more share of PEN at $30.94, and I purchased $50 worth of Bitcoin, or 0.00546 Bitcoin. My new position there is 0.164 Bitcoin, approximately 16.4% of a single Bitcoin, and my price there was $91.4850. Like I said, very happy with how the portfolio is moving. I think there's a lot to be happy about. The economy as a whole is not recovering as quickly as we would like, but there are some bright spots. And as always, don't forget to like the video, subscribe to the channel, and comment down below what you want to see next. If you comment it, I'll do my best to make it happen. Here we have a Yahoo Finance article talking about exactly what happened today. So we can see Sunrun's $3.2 billion Vivint Solar bid challenges Tesla's energy ambitions. Tesla's 2014 acquisition of SolarCity turned the electric vehicle manufacturer into the undisputed largest player in residential solar, but that lead has steadily eroded as its major competitor Sunrun surged ahead with more aggressive plans. Now with the $3.2 billion acquisition of the residential solar installation company Vivint Solar, Sunrun looks to solidify its place in the top spot. From Tesla's very early days, Elon Musk has tried to define the company as an energy company rather than just a manufacturer of electric vehicles. When Tesla made its $2.6 billion bid for SolarCity, the move was viewed as the culmination of the first phase of its master plan, which called for Tesla to provide zero-emission electric power generation options. Now that a plan faces a major test from a publicly traded competitor that's focused solely on providing residential solar power and the ability to lower costs for its panels through greater efficiencies of scale, according to analysts who track the solar energy sector. Sunrun will be freaking big. Joe Osha, an analyst at JMP Securities, told Bloomberg News. They're clearly looking for ways to get scale and efficiency. I saw estimates now that this merger means that Sunrun could potentially hold 75% of the residential solar industry. That's enormous. It's crazy. It's hard to believe. And I think it's good news for, of course, me as a Vivint Solar investor. We'll talk about what happened today. I think it's good news for the solar industry as a whole. They've slumped, and I think that these companies starting to merge is actually going to be a good thing, because it means that especially in the short term, they're going to have a little bit more flexibility and they're not going to be hit nearly as hard. Of course, in the long term, that could be bad, but we'll see what happens. Indeed, the combined companies will save roughly $90 million per year thanks to operational efficiencies, according to a statement from Sunrun, and the economies of scale will give the companies even more leverage when they contract with utilities on feeding power into the electric grid. As Sunrun acknowledged in the announcement of its acquisition of Blackstone-based Vivint, the combined customer base of 500,000 homes represents over 3 gigawatts of solar assets. The figure is still only 3% penetration of the total market for residential solar in the US. Sunrun had already edged out Tesla for the top spot, and together the two companies account for 75% of new residential solar leases each quarter, according to data from Bloomberg. So that's what I was talking about earlier, controlling potentially 75% of this space. That is unbelievable. Americans want clean and resilient energy. Vivint Solar adds an important and high-quality sales channel that enables our combined company to reach more households and raise awareness about the benefits of home solar and batteries. Sunrun CEO and co-founder Lynn George said in a statement, "This transaction will increase our scale and grow our energy services network to help replace centralized polluting power plants and accelerate the transition to a 100% clean energy future." Even as Sunrun's $1.46 billion stock, the assumption of about $1.8 billion in debt creates a massive competitor to Tesla's solar business. There's an opportunity for Tesla to sell more batteries through its residential solar competitor. Sunrun and Vivint will likely be pushing their customers to add energy storage to their solar installations, and that means either using Tesla's Powerwall batteries, its own Brightbox batteries manufactured in partnership with LG Chem. Investors have responded to Sunrun's latest maneuver by pouring money into the stock. Sunrun's shares were up more than $5 in midday trading. So next we're going to talk about what the big deal with Vivint Solar is and how both Vivint Solar and Sunrun have fared. Here we can see the massive growth today. Vivint Solar was up 38% during trading hours and down approximately 1% after hours. My total market value here is now $728, this being my largest stock holding at the moment. Today's return up $196.50 or 37%. My total return is now up $391 or 116%. I've been a bit of a naysayer. I've been all over the place with Vivint Solar, didn't know exactly what I wanted to do, but of course, this is huge. Sunrun was up today, I think approximately 30%, so not quite as much as Vivint Solar, but again, huge growth. I have seen estimates that the stock split here is going to be approximately for every 1 share of Vivint Solar that I own, I'll receive 0.55 shares of Sunrun. The acquisition and merger will most likely not be finalized until fourth quarter of this year, so we've still got some time to go, but I'm very excited as I continue saying. So my average cost is $674. On the week, we can see I'm up 47%. Over the past month, up 59%. 3 months, up 192%. Over the last year, up 83%. And over the past 5 years, up 35%. So the big reason that I like this sort of 5 years zoomed out graph is that we can see how crazy this movement is. Of course, being a stock at the lower end of the price scale, they are going to be more volatile than some larger companies. That being said, what happened today is pretty much unprecedented, 38% in a single day. But again, the earnings is something I always come back to with Vivint Solar. They have struggled, certainly in the past 3 to 4 years. They have not posted positive earnings in that time frame. As we can see, earnings are falling slightly, but they have continued to leverage their debt, have taken out more debt, and I think that being partnered with Sunrun now under the same parent company could be a huge asset. I think that there's a lot of upside here. I'm not a huge fan of Tesla, as I mentioned before, but let me know what you think. Next up, we're going to talk about Vanguard Total Stock Market ETF, or VTI. This is my third largest stock holding. It's only up $30 or 5% all time. But the good news here is that it does pay a decent dividend, up 1.3% on the week. On the month, down 2.5%. 3 months, up 20%. Over the past year, up 5%. And over the past 5 years, up 48.55%. Of course, very indicative of the market. That's the whole point here. I like it. It's going to continue to be a staple of my portfolio. The price range, it's been anywhere between $140 and $160 over the past month or so. It's right in my price range of about $150 a week, so I'm going to continue to buy it. And next, we have a very interesting one in Walmart, up almost 7% today during trading hours and up 0.67% after hours, for a total of 7.49% return, or $17.82 today. Total return is only about $12 here. But of course, Walmart is going to be a very stable company regardless of what's going on in the economy. They're the biggest player in this space and will continue to be so for certainly the short term, but I would say indefinitely in the long term. So if we look out to the week, we can see it's up 7%. On the month, up 7%. Over the last 3 months, up 5%. Over the past year, up 15%. And over the past 5 years, up 79%. I think this is a pretty good one for most investors, both due to the price point and again, the consistency of Walmart over this large span of time. And we can see a 76% buy rating on Robinhood. And the last stock we'll talk about today is Sony. I think it's pretty interesting because of what's going on with the PlayStation 5. There's been a lot of conflicting reports about price points, whether or not they're going to be on schedule manufacturing-wise with the pandemic and everything that's going on. It is trading for $69.16, down almost 2% on the day, but I still am up $26.55 all time, or just under 24%. Makes up only about 2% of my portfolio, but I like this one, and certainly a stock that I could continue to buy in the future. So on the week, pretty stagnant, down 1 cent. Over the past month, up $1.65 or 2.5%. Over the past 3 months, up 13%. Over the past year, 26%, and 5 years, up 146%. 86% buy rating, and of course the earnings, we're doing fairly well. Positive earnings sloping upwards. Q4 of 2019 was a large dip, and of course we will expect Q1 of 2020 to handle pretty poorly, but with that new PlayStation coming out at the tail end of this year, it will be very interesting to see what happens. Last but not least, we have Bitcoin, trading for $92.8364 right now. This is my largest actual holding in the portfolio. Equity is sitting at $1,523. My total cost is now $1,500.10, so almost exactly $1,500. Total return is only up about $23, but as I like to say every single week, I'm in this for the long run, which would be towards the end of next year. So up 1.3% on the past week. Over the past month, it's down almost 5%. Over the past 3 months, still up 29%. Over the past year, down 20%. And now 5 years, up 3,350%. As we can see, zooming back to the end of 2017, we've seen a pretty solid downward trajectory with Bitcoin. Of course, it's more volatile than pretty much any stock will ever be, but I think we're going to start to see an upward swing maybe early first couple months of 2020 to 2021 to the summer of 2021. So I'm going to purchase as much as I can now while the price is low. My average cost is $91.4483, makes up about 23% of my portfolio. And as I do always like to mention, I've seen estimates ranging anywhere from a target price of $120,000 all the way up to $400,000, just depends on which analysts say what. That being said, most people believe that Bitcoin is going to explode in the next year to year and a half. So let me know what you think about that. Thanks for watching the video, and I'll be back at the end of the week. Thanks.